QQQ closed last week off with a major head and shoulders pattern similar to the one we were seeing on SPY in the previous weeks. Head and shoulders is a characteristically bearish pattern, especially in a bear market like we have right now. We've seen it before, like during this rally from back here. We have a left shoulder here, the head, and the right shoulder. However, this one is much more pronounced, a lot larger, which means that it would have a lot larger of a drawdown if we are to get that drawdown to happen, which I believe will happen. If you remember previously, I was bullish in the short term back when we were consolidating over here. We now have had that short-term bullishness, and now I've reverted to being bearish again for extended downside from here. So the top of this move should be around this range that we're in right now. We're also starting to see an interesting amount of calls hitting the tape on the VIX. This is filtered for all of last week, so January 9th to January 13th. Also, I filtered for above 200,000 in premium to see what big money is doing, and it's 76% calls to 24% puts. You can see here a lot of these calls are major. We have a 6.3 million in premium for the 24 strike, 1.2 million for the 23, and just etc. Throughout here, you could see a lot of these 200,000 orders. And overall, some of these are pretty far out the money, like this 50 strike over here. We have a 35 strike, 32.5 strike. So a lot of these are far out the money. We have seen a few puts as well that have a pretty close expiration. Some more close expiration like 118s. These are mostly just weekly protection for the most part. We saw a 70 strike over here. This is likely a hedge for position because it was 25,000 contracts even, and also $250,000 in premium. So not that much, and again, it was very far out the money, so don't expect this to get hit by any means. But a lot of these, especially the larger premium ones that have a little bit further of expiration, like these two down here, the 1.5 million and 1.4 million for the 26 and 27 calls that have until March 22nd. These are some interesting orders, and it's pretty rare to see orders like this, especially first of all back to back, plus with a lot of other orders of similar stature along with it. So this is something that is on my radar right now, just because of obviously the fact that we're seeing a lot of these VIX calls hitting the tape. Another reason, if you look over at VIX over here, we are at very low levels. We are at levels that we haven't seen since all the way back around this time period of last year, literally 365 days ago. We saw around January 14th, we were around this level. We never ended up getting below this level that we were at around the 18s since all the way back then. So it's been a solid year since then. And personally, I'd argue that we're in a worse position now than we were all the way back then, just considering all the macroeconomic issues. As of now, if you remember all the way back then, we didn't even know about the Ukraine-Russia conflict. That's just one macro issue that we have, just geopolitical conflict issue that is prevalent now, and it wasn't all the way back then. So overall, the market has risked off a ton in the past couple of months so far, and it's interesting to see that we've seen a lot of these whales start to load up on calls fairly far out the money with a lot of premium on the VIX, as the VIX is in the 18s right now, which again hasn't been seen in quite a while. So a lot of people suddenly seem like they are very bullish on the market, which I understand their standpoint for that. If we look over here on just SPY in general, we have the major downward trend line that I've talked about a lot in the past, started all the way at all-time highs back over a year ago now, January 4th of 2022. And right now we actually closed either right on or just slightly above as of last week, which technically speaking should be a bullish catalyst in itself, just based on technicals for continued upside. So I understand why a lot of people are bullish all of a sudden on it, but there's a lot of other metrics along with something like the VIX being such a risk off that is very concerning for anybody that wants to go long for, let's say, a couple hundred or more points, even some people calling for all-time highs. I don't see how that would be the case, especially with all the macroeconomic issues. We have another issue coming up with the debt ceiling reaching its limit on Thursday of this week. Now, that's not something that's going to have an immediate impact. However, it's something that will gradually get priced into the market if there's no immediate solution. You can see here that there are some means that the U.S. can use over the next couple months to ensure that we don't default on our debt. I don't expect that to happen by any means, but that basically just lengthens out the process overall, but it's still something that can pose as an issue to the markets and can price in. And if you look over here actually on SPY, we go back to SPY on this chart and go back to the last time we actually had a very similar issue regarding the debt ceiling. That was all the way back in 2011. It actually sparked a downward trend that we had back here. We were not in a bear market anymore. This was already right after we had the economic reconstruction plans and everything from 2008, 2009, that low. So that we were well out of the danger range that we had previously been in all the way back around this time period. We saw like all the big issues like the Lehman collapse and everything. So we had already been recovering for a while, similarly to how we've been recovering from the 2020 time period. And you can see right here that when the debt ceiling had a lot of issues, it was right around the end of July to early August time period where the House and Congress were not able to come to terms on anything, and we saw a lot of downside right here. We even had an almost 7% drawdown day on this last day here for August 8th. So there was a lot of issues around this time period, and it led to a lot of downside. So this is something that potentially could be priced into the market in the future with some more downside if we're not able to come to terms with anything debt ceiling related. So something to note, again, this is not something that's immediate. The eventual outcome typically gets drawn out, but something to keep in mind as it's another topic on top of all the other macroeconomic issues that we have so far to keep in mind. Now, if we go back to 2023, 2022 SPY's chart and the daily chart, that is, you can see here we are retesting, like I showed earlier, this downward trend line that started at all-time highs. This is the trend line to watch the next couple weeks. It is very crucial to see what happens here. In the past, this has sparked major rejections, as you can see from back here. End of March, early April, it had a 1,000 point drop on SPX afterwards. Over here, mid-August, had an 800 point drop on SPX afterwards. Over here, very minimal drop so far, so there's a potential that this retest could spark another large drawdown similar to what we saw from these past drawdowns in 2022. So something that definitely you want to note. And we also haven't been able to close above yet. We haven't had any like daily or 2 daily candles above this level yet. So that's something you also want to watch for as of this week. Could it be another rejection? Yes, and that's personally what I expect, but you do have to be versatile and understand that if there are multiple closes above, there's a potential for some more bullish emphasis. Now, is this something that's going to go to all-time highs? No, I don't expect that at all. There's some people that claim all-time highs next. That was due to the fact that we had QE from the past couple of years, and now it's just the opposite that's taking place. So don't expect that by any means, but just look at the technicals here. If we do have closes above, then take some risk off in terms of short exposure until we're able to fall back under, because then there's a lot less risk of upside once we fall back under the level. And regardless, if it's able to fall back from this resistance as of now, then we should see clear sailing for some more downside. So do mark this level on your charts because it'll be very important to watch how price interacts with it in the next coming weeks. Also from last week, if we filter SPY for over 1 million in premium, you can see here it is 83% put flow to 17% call flow. And just scrolling through some of the important orders, such as this 1 million in premium for the 377 strike, I like to see some of these for some more confirmation bias to the downside. Now this is just a single order, but if you scroll down to see some more, you'll see other ones kind of similar to it. You could see the 2.5 million in premium for this 385 strike. That is a pretty large order by a whale. 2.1 million in premium for the 385 as well. This 217 expiration, so pretty close in expiration. That's only 1 month out, so they're expecting a pretty quick move to the downside. Also, both of these were above the ask, as you can see here. Both of them are filtered in this yellow. And just scrolling through some of these, not as many large calls betting on upside, more so puts like the 375s right here, the 385s I showed you before. So again, not as much bullish emphasis to the upside as of now. It seems that the short squeeze rally is starting to exhaust itself, just from my opinion, and also from all the puts we've been seeing so far. This is very similar to what we saw back in August when there was a lot of puts on the way up. They didn't nail the exact top, but they were able to accumulate on the way up, which is all you need to do really on SPY. It's very difficult to be precise at picking the exact top level or close to it. So as long as you add time to contracts like these whales are doing, for example, this March one for 377, then you have your risk in place, whether it be price and time or both together, and then you can hold off and wait and make sure that the move, or at least the desired move, ends up happening in your favor. So other than that, though, will be an interesting week, only 4 days long. We will see what happens if we do get that rejection off of the SPY downward trend, and I'll see you guys on Wednesday for the next video.